Hey, happy Monday. Happy Monday. I missed you over the weekend. Thanks so much for joining us this morning. I'm Jack Gately from Jack Gately Real Estate and the Online Real Estate Academy. It is a beautiful Monday morning. Happy Monday. I came into the office, found a deposit check slid under the door. So it's a good start to the day. And it is a short week, right? It's a short week. Thursday is Thanksgiving. I did check the forecast here in beautiful Plymouth, America's hometown. It's going to be sunny and 50 degrees, which will be great for the football game. So we have a couple of stories we want to bring you today. First off, we want to talk about why you should not be losing any clients right now to these lawsuits. You should, on the near term, there's no reason why you should be losing clients to lawsuits. So we're going to talk about that. We're going to talk a little bit about the economy. And, let's just dive right into our top story. So this top story comes from real estate news, and it features Melissa Savenko, who is a real estate agent down in Virginia, I believe. And you may have recognized her name because I did feature one of her tweets a while back. This is from early this month, where she lost a client, a buyer client, because they were balking on having to pay the buyer agent fee directly out of their own pocket. She's been very active on Twitter on this whole bombshell lawsuit thing, but I don't understand why you would lose a client at this point relative to the bombshell lawsuits. I just don't get that. Here she is here. She said that her clients reached out to her, and we talked about what they were looking for, their timeline, budget, must-have, and wants. Okay, so a normal, intake phone call. Then she said, hey, I've got to talk to you about this new lawsuit. Oh, boy, why would you bring that up right now? If these people are going to buy in the next 3 to 6 months, understand that really nothing is changing right now. Here in Massachusetts, even where we have a settlement in place, that settlement has now been postponed at least until March. So why would you? That's probably not going to affect their transaction. Why would you bring this up? I just don't understand it, at least in some type of bold way that she's talking about here. Told that they might be on the hook for the commission, the couple soon got cold feet, she said. Maybe it was the way she presented it, or maybe it was actually the fact that they couldn't afford it with high interest rates. A lot of reason, if you're a salesperson, you understand that most of the objections you get aren't actually, how do I want to say this? Truthful or accurate, that there's usually something else going on. And that most of the objections you get, even the ones that are personally painful to you to hear, are really about price. They're really about price. Most likely this client latched on to the fact, the lawsuit, paying the commission. But it was really a price objection in one way or another, one way or the other. I do think that she's right, that this lawsuit situation feels different. It's going to structurally change our industry, and I don't know what it's going to end up looking like, and I think there may end up being a bit of unintended consequences, and that's true. But here I realize why she pitched the lawsuit the wrong way. She's a former corporate lawyer, and kind of sounds like part-time real estate agent in a way, or maybe full-time real estate agent. But I've never known a full-time real estate agent, or actually any real estate agent, who would actually say this next sentence: I don't have any active listings right now. Thank goodness. I don't have any active listings. Thank goodness. Who the hell says that? What type of legitimate agent is happy they don't have any listings right now? And so I'm just kind of curious whether or not this agent is more of like a Twitter agent, and maybe she's in this for the publicity, for something else, rather than for the clout. Is she seeking clout on Twitter? Is that what it is? Rather than actually selling real estate? Because we sell real estate here at my office, as you know. Deposit check in hand, as I just told you this morning. But Like, how can you be happy you don't have any listings? I can't even read the rest of this. I can't take this person credibly from here on out if you're happy you don't have any listings. That just doesn't make any sense. Just doesn't make any sense. So very interesting tweet from Andrea B. over at Inman, the Realtor Association, who prides itself in ethics, right? Their whole pitch of being a realtor member is that effectively everybody else in the real estate industry is slimy, unethical, but because they have a code of ethics, they're special. Pay no mind, of course, that they just were found guilty in a massive antitrust conspiracy case. Don't focus on that. Don't focus on that. They're special. They're not slimy because, of course, they have a code of ethics. And apparently there was a proposal to change the code of ethics out at the big NAR conference on the West Coast, and it went down in flames. And I want to cover this for you because here in Massachusetts, we have I don't want to say a similar rule, but we have a rule that's kind of like this. Let's bring it up here. They had an amendment to Standard Practice 4.1 that would basically require realtors, purposely mispronouncing it for you just to piss you off. I'm a little spicy this morning. Before signing any agreement, if the realtor represents themselves, represents a member of the immediate family, represents their firm or broker, or represents an entity in which the realtor member or immediate family has a legal interest, in other words, a business interest, or has a present or contemplated interest in the property for sale or lease. So for whatever reason, at the NAR conference, this would have been a move to make Standard Practice 4.1 stricter, or definitely a stricter version of the prior version, to have more ethics in our code of ethics or their code of ethics. But no, got shot down. And I think maybe there was kind of like a dynamic like, hey, you got us into this giant lawsuit mess, and whatever you're bringing to us this year, go F yourself because we're just mad at you. So there could have been kind of like that psychology of the reason why they shot it down was because it was just their way, kind of the rank and file brokers, to kind of just voice their displeasure for the national office or for the whole structure of the thing. I don't know. But recently here in Massachusetts, we have had a change, an evolution in the way we view the disclosure of these items. So here in Massachusetts, if your family member, or according to the law, your kin, that's the word they use, or your business partner has a financial interest in the property, you must disclose that. And for a very, very long time, that was simply done with like a one-sentence statement in a purchase and sale agreement. For instance, Sally is representing her brother in this transaction, something like that. So that it would be disclosed and it was in the purchase and sale and both the buyer and seller sign it. And that was sufficient for quite some time. Then some guy in a transaction, a real estate agent here in Massachusetts, got in this trouble in a transaction that never closed. And he did not get a written acknowledgement that he was representing himself, and he got in a little trouble with the Board of Registration, and actually ended up speaking to this gentleman and got the whole background, which I don't feel privileged to share with you at this point. But basically, he had to do some additional training, and the interpretation of the rule changed. And now here in Massachusetts, you need to have a separate piece of paper effectively, and you have to get that done at the beginning of the transaction if your family member or your business partner has a financial interest in the property. So this would be also for sale, or for lease, residential or commercial. It's kind of universal. It is universal. So I kind of agree with the direction of this proposed standard of practice 4.1. I don't know why they didn't adopt it. Could it have been written better? I probably could have been written better. Everything can be written better. But I think that's an important thing in our business. And when you hear about sleazy real estate agents, and there are some out there, right? There are, yeah, unfortunately, there are. There are situations where, as a real estate agent, if you have an interest in buying a property, you absolutely need to disclose that, like right off the bat, and preferably in writing. If you're representing yourself, you also need to disclose that. And I don't know what the rules are in other states, but I welcomed the stricter interpretation of it here in Massachusetts. I think that was a good idea. 2 thumbs up for making it stricter here in Massachusetts. I think that's good. Anything that we can do to be as transparent as possible in our industry about why you are there, because the assumption is that you are there to represent your client, and that, your client is not connected to you in any way, shape, or form. Your client isn't you. Your client isn't a family member or a business partner. Your client is just somebody that from church or, the baseball team or whatever. Whenever you have that complicating factor, we need to do as an industry, I do believe we'd be much better off as an industry if we shared that information as quickly as absolutely possible. And I would welcome this change from the realtors. I hope they put it into effect sooner rather than later. By the way, talking about transparency, I made a video over the weekend because I just couldn't get away from you guys about how much money I made on YouTube in the last 30 days. And yes, so get right over there to watch it after today's live stream. And I'll take the suspense out of it. It was not really enough to fill my gas tank. I think it would maybe just enough to fill a Bronco. I drive a Bronco, Ford Bronco. And so it might be enough to fill the Ford Bronco gas tank. But there were at least 4 other things, 2 which are intangible and 2 which I think are actually dollars, that are definitely a benefit of doing a live show like this. And I think those could be applicable to you or any really professional or anybody that has a trade about doing a live stream news show about your industry or profession. So I hope that you get a chance to watch that video. I really enjoyed watching it. Mark Zandi from Moody's is out with a new tweet from last night or yesterday. Rate-sensitive economy means the Fed's aggressive rates aren't as aggressive as they appear. In other words, Mark Zandi seems to be arguing for higher rates. The R-star, which we've done a video about 2 months ago because I knew it was going to be an important thing to understand. That's the rate where the Fed policy is neither supporting nor restricting growth. And Zandi is arguing that the R-star is closer to 3.5% rather than the 2 or 2.5% that the Fed is currently estimating. The Fed has an inflation goal of 2%. So when you read this tweet, basically he's saying the Fed needs to raise rates higher if they're going to cause the inflation, the recession that would kill inflation. At least that's the conventional wisdom, right? On the other hand, there also is kind of an admission here that we should probably give up on the 2% target for inflation and just admit that the Fed is going to stale 3.5% of our value every year, right, through printing of money, which seems to be around the corner, which would drive our deficits higher and inflation probably higher. So seems like everybody is on board with abandoning the battle against inflation. We heard this with the banks last week, that everyone is basically off the higher for longer bandwagon. Remember higher for longer? All the banks, like 6 weeks ago, everybody was saying higher for longer, higher for longer. No. That's over now. That's over now. All the banks got off that bandwagon last week because of the low CPI print and because of the low job numbers, representing just 1 month of numbers. They saw 1 month of numbers and they were like, we're good. We're good. Let's fire up the printer. Fire up the printer. This has absolutely nothing to do with it, but a totally unrelated story. In Argentina, a pro-Bitcoin, anti-central bank candidate who is going to crack down on inflation just won in Argentina. But, of course, that is a completely and absolutely unrelated story to inflation in the United States. Nothing to see here, folks. Move right along. Nothing to now, of course, the Argentinian inflation problem is much worse than the United States. They're actually thinking about changing currencies effectively to the United States dollar, which we still have inflation here, of course, and the dollar has inflation, but that's much better than like the 100+% inflation or some crazy number that they have out there. And I brought you this story last week. Thank you so much for joining us today, by the way. If you want to throw in a comment, I do have the comment tab on my computer over here. I will read them today. And I brought you this story last week about where have all the foreign buyers gone for U.S. Treasury debt. And author Luke Groman notes that this is one of the most important macro developments in the past 50 years. And it is very, very important. And we covered that story last week because, of course, the Treasury auction for 30 years went very bad. And then they just blamed it on some type of hack of a Chinese bank. Okay. Let's take a look at the Treasury this morning. Let me get a sip of my tea. Hold on. It's at 4.47. You might remember that resistance previous to this was 4.34, and that seems to have been holding 4.34. That was resistance, and once that broke, we went to 5 very quickly. We'll see if 4.34 serves as support now that we're moving on. Lance Lambert last night is reporting, and I think Morgan Stanley issued a note over the weekend relative to the housing market. And this is it in a nutshell. They're expecting prices to fall by 3% in 2024. I'm curious what you think of what's going to happen in 2024. I was listening to Ivy Zellman. Some of you might not remember Ivy Zellman. She's been around for a long time. She used to work at one of the big financial, maybe JP Morgan. Now she has, for like 15, 16 years, she has her own consultancy. Let's listen to her prediction for prices in 2024. I think she's an important person to listen to.
To work itself out anytime soon. You think 2024 flat? Nothing.
Yeah, we're looking at flat. I think the new home market just down slightly, but with respect to kind of what unsticks the market, I don't know. I think you've got the risk of distress looking out further. You kind of
risk of distress. In other words, if the job market craters,
look at the aging population, that would help move some people out, vacancy.
If a bunch of old people die, we heard that last week too, right? That was in the Boston Globe. Those darn old people, they keep aging in place. How dare they?
These would rise.
2026, no, 24. After,
by 2030,
after 24 is 25. It's much better in 25. And you already, in your business, you have to be able to make determinations about something that far off. And
we try.
Yeah. And much better for 2025, a rebound even.
Well, 25, we're looking for a reacceleration off a very low base for existing home sales, only up 7%, but it still would be on a relative basis extremely depressed levels.
So when
what you're really hearing here effectively, and I think this is if you're an agent or a broker out there, what you're really hearing about is effectively a market where we're probably going to be seeing a lower level of transaction than we have. That's going to be the new normal if you haven't already figured that out. Everyone is seeing, let's wait for the spring market when all the houses come back on the market. If I was looking to, how do I want to say this, manage my business strategically, I would be trying to dramatically reduce my fixed costs and focus my variable costs on marketing as best as I possibly can, especially long-term marketing, like, I don't know, YouTube or something like that, where I can focus on sellers, because we might be looking at a market which for years is going to be a lower volume market. In other words, fewer low-hanging fruit. So in that regard, if you're out there as an agent and you're targeting divorce market or you're targeting older sellers, those sound like really good markets to be in, because as the baby boomers age, they're going to want to sell eventually, right? Those are going to be sellers. There's always divorce, especially in a recession. Divorce rates tend to go up. Now, I don't want to be crude, but those are people that need your services, and those might be markets that you might look into if you're a real estate agent. I did catch this article this morning. I was actually going to talk about this before I saw the headline in the Wall Street Journal, but the headline this morning in the Wall Street Journal is office landlords can't get a loan anymore. Office landlords can't get a loan anymore. And I had already queued up this story about the Boston real estate market. And I want to give credit right away to Perry Commercial Real Estate there they are. This is the Perry perspective. Perry Commercial Real Estate from Boston. I just want you to take a look at this numbers here in the Boston market. Here we go here. The vacancy rate for downtown Boston space is 16%. That is higher than it was last year. Cambridge, just across the river, across the Charles River, 10.3%, higher than last year. Suburban, 16.5%, higher than last year. And not nominally. They're significant bump up here. Higher than last year, higher than Q3 of last year. Then here they say here, according to this data, which is based upon geography rather than a sample specific buildings, workplace visits in the city of Boston have leveled off in the last 12 months. In other words, the people that were going to come back to work have come back to work. Anybody that was going to come back to work and show back up at the office and going to take the train or drive in or whatever, they've come back. So all those people that were filling the downtown lunch spots and all that they're back. Nobody else is coming back. If you came back, you're back. Which gives us this chart, and I hope that you can see it here. Fantastic chart by Perry Commercial Real Estate in downtown Boston. I don't know them, but I love their report that comes out on a quarterly basis. Workplace visits pre and post pandemic. And this is the yellow dotted line is 100%. All of the visits, no matter what part of downtown you're looking at, are all under 80%. And most are hovering at about 60%. So I don't know where they got 80%. That seems like a optimistic number. And as you can see, there's not a lot of regrowth in this number. It's kind of leveled off, as they admit. And I think this is a story that exists in a lot of downtowns across the country. And I love this data. Certainly, we've talked about commercial real estate and how that's going to be a problem for the real estate market and further downstream for the mid-cap banks that hold a lot of this debt, because if you can't refinance your building, you might turn the keys in to the lender and foreclose upon, just like that giant mall that happened out in San Francisco across from the trolley stop. So when you have 70%-ish of people coming back to your downtown Boston area, whether that's Back Bay, Financial District, Midtown, Government Center. Remember, these are all distinctive neighborhoods in downtown Boston, but then again, downtown Boston is really small as compared to geographically Houston. So in Houston, that would all be one area probably. But these are distinctive little neighborhoods in downtown Boston. We got like 70% of the people back, and that's now leveled off. Huge impact upon mid-cap banks and, of course, lending institutions that own the paper on those buildings. This week, it is a short week, and we're looking later today at U.S. leading economic indicators. We have a Fed president talk at noon. Tomorrow, existing home sales come out at 10 o'clock, plus the Fed minutes come out at 2 o'clock. So that will be an important economic data point tomorrow. Both of those things, existing home sales and the Fed minutes tomorrow. Jobless claims will be advanced one day. They usually come out on Thursday, but this week they're going to come out on Wednesday. Plus, we also get durable goods on Wednesday. Let's see if we have any comments. We don't have any no comments today. Well, I missed you in your comments, and we'll be back tomorrow. Hopefully, you'll have a comment tomorrow. Until then, have a great day. Bye-bye. Go make some money.